All right, guys, I'm going to do a long form breakdown of the stock market chart for you all, and it's going to last about 20 minutes. So I'm going to break it into two videos so you can watch the first half and then the second half. Good morning, guys, and in observance of the Jimmy Carter Memorial, the market closed and did not open for the New York Stock Exchange at 9:30 a.m. as it normally does for options. However, it was open all night long for the futures, and we ended up trading futures, and we'll get into that in just a moment. But let's find out where the breakdown was. So the market closed right here at 4 o'clock in the afternoon. So we're gonna highlight just this area, just the area that we were trading today. We will bring in these double blue lines there so that you can see that. So for me, it became very clear that we were going to be going in a downward trend. We were pushing down at 2 o'clock. We pushed all the way back up around 3 to 4, but then we relented and fell very hard right around here. And so once we opened up at that high that we ended the day on at 6 o'clock and we pushed down below the 200 EMA, all it was signaling and identifying which 200 EMA was going to work the best for me. So now we're going to cut off all of the previous day and do just today. And it was clear. I went through, I was like, okay, the 15 minutes is way up there. That's a no. I was like, the 1 hour is nowhere to be found. You'd have to shrink it all the way down here. It's like super up there. I'm like, that's not gonna happen. We fell from there, pulled all the way back up to it and fell down again. Again, when you hit that 1 hour, you break that 1 hour time frame, you hit like serious support, you're gonna go back to that 1 hour time frame. So always remember that, guys. You'll have another opportunity. Like, this is just a side note. This is not what I'm talking about today. But you'll have another opportunity like this to get into a massive trade. If we break a 1 hour or a 4 hour time frame, we are going to go back to that 200 EMA for the 4 hour, and look at how much ground we covered. You're going from 59.70 all the way up to 600 and almost 607, but really $605, right? That's crazy money. That's crazy money in one 1 hour candle. But prior to that, we had a massive fall the hour before, hit the double level of support here. But when you leave a wick like this behind, you have to fill that with the body of a candle. So once we hit that 200 EMA, you just got to wait for it to go up and through and then come back down through the 200, and you can take your trade to the downside. That is just a little tip for you guys when you're looking for a really big trade. And what time in the afternoon? That was 11 o'clock in the morning. So we had the 10 o'clock candle be insane, crazy pull down. And then we had the 11 o'clock candle be a little rebound. But we were always going to go back down and fill the body of this candle. I mean, fill this giant, enormous wick that we left behind, which is all that is, the massive imbalance of orders. So we hit the layers of support here. We hit a demand zone. It sends us back to the 200. If we don't break the 200 and go all the way back up to the supply zone up here, that's it. We're going down now, baby. You're straight in the Range Rover. It's over with. We're going all the way down. So then we hit our final support line down here, pull it back up into the double support area, started consolidating. And this is a form of consolidation that ends in continuation. We have a massive downtrend. We don't break the mid level of the downtrend, so we don't have a 50% retracement. We just kind of keep bouncing off of this. I'm going to zoom in on it so you can see it. This double blue line here, which is acting as resistance now because it was support over here. It's resistance now. We finally hit it, and then we reject, and then that gives us the strong rejection at 6 o'clock in the morning the next day that we need to take this even lower. So now you know that the trend is still riding down. But when you're on a 1 hour trend, we're going to get to today and trading today. So I'm going through the 15 minute. I'm like, no, the 15 minutes way up here. That's not a good one to use. Then I see the 5 minute. I'm like, ooh, we're intermingling with the 5 minute. Let's go ahead and zoom out real quick. So you click this little circle there and it zooms out. I'm like, oh, that's looking good. So we found the range within the 5 minutes time frame, right? Click on the plus sign, and we're going to take just 6 o'clock last night when the market opened until when it closed today. We break the 200 EMA on the 5 minute, and since we're in a downtrend, I'm looking for anything underneath that starts consolidation. So we'll start in this little area right here. This little area has some strong consolidation. No, I want less of it. I want just this little bit right here. Can I have it? Can I have just this little area? All right, so shrink it down to like right there, shrink it to like right here. We'll just have to do it manually. So we're looking at this area. So this is 4:30 here. Right here is when 6 o'clock starts. We get the sharp push down off of the 200 EMA. We kind of meet at 4:55, the high right there. So that shows us that we're going to have a little continuation of the push down. We get the push down. Look, we go straight to support that we had at 435. We go to that support again, pushes us back up towards the 200. And so now this is the pivotal moment to know what's going to happen for the night, right? We're pushing up, pushing up, pushing up. Can we physically break with the body of a candle, the full body of a candle, this 200 EMA? If we cannot, we're going to hold the trend. So we push up, we hammer it, we hammer it, we hammer it. It doesn't break. We start pushing down. We get below the 9 in the 23 EMA. The yellow one is the 23 EMA. The green one's the 9. And that starts to show you that we're going to hold this trend. We consolidate for 5, 10, 15 minutes. We break down. But every time that we're consolidating, we're breaking down to this level right here. This is the level that we're trying to break. Once we break this white line with the body of a candle, we're going to get sent, because we have to fill these volume imbalances. These giant enormous wicks that you're looking at right here are just volume imbalances that show you where the market wants to go. Doesn't mean that it has to go there immediately, but it does mean that it's going there eventually. So we go 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 1 hour, 1 hour, 5 minutes. And an hour and 5 minutes later, we finally break the level of support. The physical bodies of the candles, I say this all the time, the physical body of the candle is where the price action lives. The wick is the manipulation, but we will eventually fill the manipulation with the body of a candle. So look at what we did at 1 hour and 5 minutes. We're pushing down. We're finally breaking out of that white level there. Hour and 10 minutes, we break all the way down. Look at where we end. Just below the wick there, the full body of a candle creates its own wick, going down to the double level of support, and pulls back to where? Right into this area here, right? But then the trend is formed. When you get a massive candle like that, now we got to fill this volume imbalance that was created. This volume imbalance that was created has to be filled by the body of a candle. So now the next subsequent like 30 minutes is just filling that. 5, 10, 15, 20, 25 minutes. We finally break that one. Guess what? We create another wick. And I love when these happen. When you start creating wicks in a downtrend and you start being able to see where we're going to, you start to see that what was support right here becomes resistance. So now we're going up to it. We try to get all the way through it. And if the body of the candle does not close above this, it's going to go back down into the trend. And it does just that. Goes down into the trend, pulls back. Why is it pulling back so aggressively now? Well, that's because there's a lot of contracts, a lot of orders to the upside down here. And because we left this giant wick right here, so we're going to have to take it back the other way for a little bit, right? But we finally fill this wick. We fill that wick, create another wick down there, and that's something that we'll visit later on. But remember this wick. Remember this wick at 7:35 in the evening, right? So now we start going back up, and all we're going to do is go back up to the resistance area. We hit the resistance area. All right, now we start consolidating in an uptrend. When you're consolidating in an uptrend, more often than not, what's happening is they're pulling it down to shoot it higher. Pulling it down, shooting it higher. So now we break the resistance area. But look where the 200 EMA is. It's moved down a little bit, so it's showing us that, hey, we're in a further down trend. Even though we had all this space here and we're finally going back up, if we don't crack this, we're staying below this resistance line right here. And you have to get, in order to crack the 200, you got to get the full body of a candle above this blue resistance line at 59.91. What do we get? We hammer it, we hammer it, we fall. We hammer it, we fall. We hammer it, we hammer it, we fall, we fall. We hammer it through. We almost get the full body of a candle there to send us back to the upside. And then we go, nope. And then they go, fine. That means that there's a lot of orders sitting in this little $2 area right here, really sending us down. But after a lot of orders get stacked in there, because it's like a fight, it's like tug of war. They're tugging and pushing and pulling and pushing and pulling and giving up. Finally, when they can't push it any higher, they just relent. And when they relent, you're going to get a very aggressive pull to the downside. And now you go back to 7:35 in the evening, and now we're looking to fill this. So we're going to put this line right here to give us a notification when we cross that line. And now we start looking across that line. So you formed a range now. We have a range. We have the upper part of the range. We have the lower part of the range. We need to reach the lower part of the range. So in that next 5, 10, after, what was this? So here was 7:35, this was 8, we're at 9 o'clock now. So then we go to 10 at 10:45 in the evening last night. We finally start breaking this range and breaking this level of support here. Once we get below that level of support, it's going to be a nice little ride down. And if you get in up here in the A level entries, or even here the B level entries, you can pretty much just hang up your hat for the night.